Morning, traders. So welcome back to Morning Cup at 8. Aiman here. Right. So looking at the S&P 500, so it has just closed higher yesterday's session, pushing to the fresh record highs again. Driven mainly by the major tech deals, continued expectation for more rate cuts from the Fed. Also generally strong market optimism, right? So, however, a pullback might occur if there's any policy changes, inflation, if the inflation still above target, and also upcoming economic data will likely be in focus. So for now, I think tech AI remains a strong theme, but we're also keeping an eye on the things like consumer financials, names that can be benefit if rate is further. So, technical wise, the index still trading above its both moving average, signaling a positive bullish trend with a resistance at 6,700 points. Can be easily be breached in the coming sessions ahead if momentum still persists, right? So, right, just highlighting the obvious from yesterday's move, we saw gold price has rallied recently and continued to climb higher, driven by growing expectation for further Fed rate cuts, right? I think by the end of the year. Also, inflation worries and rising demand for the safe haven asset. So, the yellow metal is riding uh, in a momentum, especially it breached the record high of 3,700 US dollar to close at 3,775 yesterday, right? Investors are now also watching closely the upcoming US inflation data as well as the Fed speech this week. Those are likely to set another leg higher for this yellow metal, right? So for now, I think goals look a bit like a defensive play in the mixed signals. So from here, do watch out for the gold stocks as it uh, gaining traction, right? Okay. So this is looking at the US trading stocks that we have published overnight. We have published Sophie Technologies, which is Sophie. So the stock has breakout from our previous first resistance and second resistance. So the stock has also breakout above the $29 level. Well, if the bullish momentum could persist, we can expect that the stock to travel towards the $31 level on strong momentum, followed by the next resistance at $33 level, right? So now if the counter reverse and trend softer, right? So do mark at $27 level for the immediate support, as it could indicate an initial trend of reversal signal. Right. Also, we have here Palantir. So if you see the counter experience, it's followed through from the previous session momentum and breakout above the immediate resistance at $180. So if the stock climb higher, we could see that it might travel higher towards the $200 level, with the next resistance is seen at $220 level. Now, if the index slide lower below the $160 level, so this might signal a shift to a bearish structure. Right, so we have two breakout counters for the US trading stocks, which is Sophie Tech and also Palantir, right? So, looking at the China A50 index, so it closed up modestly, helped by the decent PMI readings and also improve yield trend that is REIT pressure, right? So investors are adding risks, I think, but some cautions creeping in. Momentum is not as strong as before from here, as you see. Okay, but I think technical wise, we can see that the overall trend for the China A50 index is in a broader trend, holding firmly above both moving average line, eyeing for its immediate resistance at 15,500 points. Well, at this juncture, market still forming higher highs formation, right? So, looking at the WTI crude oil price futures, right? So it has dropped slightly at yesterday's close as concern over uh, oversupply and weak demand offset support from the recent Fed rate cuts, right? So if you remember, over the past few weeks, uh, crude stock or crude inventory fell sharply. The bigger build in the distillate inventory is dampening optimism, right? So I think price are being squeezed between supply risk and also demand. I would say demand dump. Right, so sentiment-wise, the oil still remains neutral at this juncture, with our short positions remains kept unchanged as we stick to the negative trading bias. Okay, so today, later at 1 p.m. later, you are free. Let's tune in for BM technical analysis event that we have organized. So I'll touch on some of the strategies, yeah, on screening stocks and maybe a lot more. Right, so coming back to Malaysia, so FKLI picked up slightly yesterday, but adding by 2.5 points on improved sentiment, likely helped by yesterday's announcement from our PM that around 95 petrol will be subsidized at reduced rate, which is 1.99 per liter. You know, I think starting end of September under targeted scheme subsidy, right? So this somehow sends a signal of more measured fiscal reform rather than a broader subsidy removal, which is worries among the consumer and also businesses. So I think for this week, right, maybe we can give a little focus on sectors like auto, transport, consumer, construction, uh, y- uh, yeah, because these sectors, sectors that I mentioned, stand to benefit from the less uncertainty in the fuel costs and also government spending in public works, right? So yeah, still can refer to our updated watch list here. Added my news and in the list. Reiterating, Dufu also added well chip to the list. Yeah. So I think if you follow closely our watch list, congrats. I think some of the stocks that have been highlighted, like UWC, we have Almas also here, right, have experienced a breakout recently. Right, so moving on to our Malaysia trading stocks. So we have Dufu today, right? So it has triggered our screener. So the stock has experienced a breakout formation and breakout above the 1.45 cent. So with that, we expect the momentum to remain bullish and the stock able to climb higher to test next resistance at 1.60 cent, followed by 1.70 cent. So if the counter breakout below 1.30 cent and from a new lower low, so this could indicate a near-term pullback. So next, we have Well Chip Group. So the stock yesterday, has experienced a pending breakup where it hits the resistance of 1.70 cent on quite high volume. All right, so should the bullish momentum hold and continue to trend higher in coming session, the counter potentially climbing higher towards the next resistance at 1.82 cent. Uh, after after it break out above 170 cent. So second resistance is at 195 cent. Well, if it dropped below 158 cent level, I think this would open the door for the correction phase, right? Okay, so today I have extra stocks for you guys to look into. Right, so we have NE stocks. I mean, these stocks been triggering the screener after it has cleared out our resistance so far. So at this point, indicators are in a positive territory, where if you see the RSI is well above the 50 mark level. Also, the MACD above its signal line positive region. I'm using the FIBO projection, so you can see that the nearest resistance now to monitor is at 81 cent, followed by 86 cent, with support now at the previous resistance, which is at 75 cent. Right. So same goes to my news here. All technical indicators are in a good positive signal. I think the counter rebounding perfectly well at the Fibonacci retracement of 50 to 61 golden ratio. So I think now it's about time and volume, right? So look out for the resistance at 66, followed by 69, while support is at 62 cent level. Right. So moving on to FCPO. So FCPO saw a decent rebound, adding by 17 ringgit yesterday. I mean, several factors contributed. So far, in general overview, I think export data saw from the early September is stronger. Also, rival oils have recovered, giving a positive breath to the FCPO as well. Right. So I think overall sentiment is improving. Though upside may be capped unless export demand continue to accelerate or inventory start to fall. Right. So for now, we keep our long position unchanged. We resistance at 4,500. And if this level is easily shaken off, I think next resistance to look at is at 4,600. We keep our stop loss at 4,350. Right. So before I end my presentation, once again, let's tune in our BM technical event this afternoon at 1 p.m. Where we show you guys how to use the correct indicators and screen some of the stocks, right? So with that, I pass the floor to the next presenter. Thank you and happy trading.
Hey, good morning. Welcome to Morning Kappa. We've got an update on Kelington Group. This is basically the announcement that they had yesterday in terms of the letter of award from a major US-based semicon company. The name is actually Micron Singapore. Basically undertaking a bulk gas distribution piping system project worth about 33 billion Sing, or an equivalent to 108 million ringgit. This job basically involves the customer's high-end bandwidth memory advanced packaging facility. This is a first of its kind facility in Singapore that basically caters to the strong demand for AI chips. Works will start immediately, completion targeted for December 2026. So we do understand that production will basically start sometime in the second quarter of next year. Now, if you look at the latest award, the new order wins are at 1.1 billion year to date. This is right till first half of the month, September. There's obviously more orders to come into the fourth quarter. In the tender book, it's well over 4 billion, netting off the latest win, of course. 1.1 billion in terms of new orders are already at about 61% of our orderable replenishment assumption of 1.8 billion. We do expect major announcements upcoming from the likes of another German chip maker. Which they are tendering. That's worth 1.4 B. There are also a couple of works from India with about 1.1 billion there. There's also China, Hong Kong, and Singapore combined. Tender book of over $1 billion as well. Do take note that they're also getting into new markets. I think one of these new market they're eyeing is basically Japan, where on discussions are discussions ongoing with the Japanese government for an upstart foundry called Rapidus. There are also by invitation of Micron. They've also gone into Japan, looking at Micron's next expansion. So I do understand that Micron is basically coming up with a new DRAM facility in Hiroshima. No change there in terms of forecast for Kelington. We've already built this particular award into our assumptions in terms of the order book replenishment. We expect additional order wins into our fourth quarter to basically drive cumulative orders to an all-time high. Given the continuing strong earnings execution, robust tender book pipeline, as well as progressive margin expansion, valuation expansion is not unwarranted, with the stock exhibiting some scarcity value. So we've actually upped our target price to 610 from 555 previously. We've now raised the target P 2.5 times of KL Tech historical mean, with the expansion spotted by the strong earnings outlook, record tender book, as well as management execution. So the target P now is 28.8 times versus that of 26 times previously. Okay, we're keeping our buy call. This is one of top picks within this small mid-cap segment. Okay, I'll pass you on to Meng Horng.
Yes, let's move on to an announcement by Solarvest. Now, they have announced that they are entering into a joint investment framework agreement with Brookfield. This is from Brookfield CTF Asia Holdings, targeting the development of at least 1.5 gigawatts of RE projects, mainly under the PRESS scheme over the next 3 to 5 years. Now, financing will be structured on a project-by-project basis with external debts raised via loans, bonds, sukuk, as well as supplemented by equity contributions from both parties. Now, each project will be held under a special SPV. Solarvest holding the 51% and Brookfield holding the remaining 49%. Now, background on Brookfield, they operate under Brookfield Catalytic Transition Funds, which is a climate and energy transitions investment vehicles established by Brookfield Asset Management, which is based in Canada. They have about $1 billion of USD assets under management, and 137 billion in the renewable power and transitions assets globally. Now, the CTF is mandated to deploy capital into the clean energy and transition asset in the emerging market, including South and Southeast Asia, with a fund size target of $5 billion. This investment is the first for Brookfield in Malaysia. Now, in terms of the impact to Solarvest, that it is positive, for Solarvest point of view, in terms of the investment merits as well as the sustainability. These partnerships enables Solarvest to jointly develop and expand its renewable energy asset portfolio while boosting the EPCC development over the next 3 to 5 years. The rough estimations is about 2.5 to 3.5 million per megawatt, would potentially somewhere between 4 to 5 billion of EPCC contracts value opportunities over 3 to 5 years. Also, leverage on the Brookfield's cost capital and corporate network, in securing the price of takers agreement, which is essential, in clinching, a deal with inside price scheme, as well as getting necessary approval and project feasibility. Now, Solarvest was compete in the development activities, including site identifications, regulatory approvals, land lease, and project completions, with potential development margins, as well as further power generation sales from asset ownerships. Now, the work for Solarvest at the current moment is about 1.2 billion as of our first quarter in FY26. They target to achieve about 2 billion by end of 2025, and with further upsides into 2026, driven by various new programs such as MyBest, the rollout of EPCC contract under LSS 5+, and others, in scale projects such as CREST and the rest of the programs. Now, we think our valuation assumptions, margins, as well as the gearing, in view of the latest development. This essentially linked our FY27 and 28 earnings forecast by 6.6% and 31% respectively. As a result, our SOP target price is now raised to 3.26. It was 2.95 previously. This is inclusive of an 8% ESG premium. Now, with the stocks, as I think they will be achieving greater heights into FY26 and FY27, and also in line with the Malaysia National Energy Transition Roadmap itself. So maintain by the stocks 3.26 new target price. Thank you for listening. I think that's all from us.